Hello, monsters. This is Fahad. I'm back. I want to take a look at a small cap med tech stock today. The name of the company is Merit Medical Systems, symbol MMSI. Merit Medical System. Here's the chart. This is about $600 million small cap. It makes stem cells. It makes a few other things that goes along with it. I'll dive into that in just a little bit. But here's the technical chart. Now there's a beautiful looking chart here actually, even though this looks pretty. It looks like a very big ugly sell-off way back in October. But here's what I'm looking at. So you have, this is the large inverse head and shoulder pattern. So you have here, all over here, the left side of the shoulder. Here's your head, and here's your right shoulder. So this is an inverse large head and shoulders pattern, which is basically breaking out today on heavy volume. As I write this, as I'm discussing this right now, the total share volume on this very large power candle is about 20-25% above daily average. And so, and you know, it's only it's what, 12:45 right now, which means that there's still many hours to go. So this is gonna end up being breaking out on this, from this large inverse head and shoulder, on at least 2 times share volume. So I think it's worth attention. As it breaks out over here and is leaving behind this volume of a price resistance right here. Let me highlight this real quick. I'm expecting this to go to mid-20s, maybe all low 20s all the way to mid-20s. So as it breaks out here, my target is actually all the way towards $22 a level. A better look of that is this right here. So I put it out. So what do we have? Let's see. We have this thing breaking out right here. This is the call it 1950 resistance right here. It's breaking out on high volume. MACD is starting to turn higher. RSI is powering higher, and basically not overbought yet, because this is probably going to go all the way to 75 or 80 RSI. As it breaks out of here, there's a 200-day moving average that's going to come into play a little bit around 2030, but I think the stock is not going to have any problem passing through that. I'm expecting first target of $22 a share, which is all the way up here, and then after that comes $23.70 a share, which is all the way. So you have good 10% to the upside between here and 22, and then probably another, let's call it 4 to 5% of upside from that all the way to $23.70. This is the targets, and these are the, use a hard stop at 1920. That's important. Use a hard stop at 1920, and basically that 1920, the way I came up with that, just to quickly show you, if I go to the minute chart, it's very simple. Here's the intraday chart. Come on. Here's the intraday chart. So this was Wednesday. It came up to 1920 and then backed off a little bit. Then this is 1920 on yesterday, on Thursday, and it backed off a little bit. And here now it broke out on high volume. Look at these volume bars, volume bars, volume bars. And it's breaking out through this, and it took out that 1920 on high level. 1950 is where my large volume over price resistance is on the daily chart that I showed about, and it's powering higher. So basically you want to put a stop where it was pausing in Wednesday and Thursday. So your stop is right here at 1920, and the stock currently is at 1980, and your target is all the way to $22 a share, which is 10% upside from here. Okay, so that's the technicals. Now let's go to the option market. So this is what I'm seeing. It never appears on my radar. Never see any action in this. I mean, if you just look at the open interest, you know, there's nothing here. Open interest is very, very low. But here is where they bought 800. Somebody came out this morning and they started buying in small lot sizes, you know, and they bought, accumulated a total of 800 contracts of May 20 calls. And I can tell you what they paid. They paid $1.10 for these. So obviously the implied volatility ripped higher immediately, because there's never any history in this and the liquidity is very low. They bought 800 of these for $1.10 offer. They were buying these for $1.10 offer when the bid on this was only 35 cents. So that goes to show you how little the liquidity is in this. And because the spreads were so wide and there's no liquidity, the implied volatility ripped higher by 53%. I mean, the implied volatility when the stock opened was only at 38%, and now it's 58%, so it ripped higher big time. They're looking for a breakout through 20. So here's the implied volatility right here. This was 38 and now it's 58. And then the final thing I'm going to say are things about fundamentals. Now, there's not a lot of coverage here. So, I literally went through the last 6 months of digging through my research reports, my folders and everywhere, and asking around to see if I can find something good, but I just could not find any research, good or bad, it doesn't matter. And so basically what I did was I went straight to the earnings conference call. I pulled up the transcript from the last earnings conference call to put my own thoughts together to see if I have anything that I can hang on to. So this is what I came up with. These are the highlights from the last earnings report that came out on February 22nd. The reported EPS was 24 cents versus 22 cents estimate. That's a beat. Revenue is 141 to 138 estimate. That's a beat. Revenue growth was 4.2% or 6.2% in constant currency. That's pretty healthy. And by the way, that was 6 straight quarters of positive earnings growth with a beat. 6 straight quarters. So keep that in mind. And then fiscal year 2016 EPS guidance was raised by 2 cents to 99 cents versus 97 cents. Okay, that's all history. What did management say about the future? That's where I get a little bit interested, because I'm trying to get a clue whether the quarter that's coming up is going to be even better than the one that we saw last time. So since that last earnings report, this is what we know that has taken place. And I quickly highlighted here. This was a big thing supposedly for management from what I gather from the conference call. So I think it moves the first point here I'm talking about Mexico. This was a big thing. So I think this is going to probably have some impact on moving the forward earnings estimates. They started production in Mexico in early February. 2 production lines were started in February and another one was added in March. Management spent a lot of time talking about this, and they were really bullish and they were really good about it. So I'm thinking that this is most likely is going to have positive impact supposedly on the bottom line. Then they entered into Australian market in March, and they're expecting double-digit growth from that. Then they entered into Canadian market on April 1st. They're expecting a strong launch there. Also in late 2015, they announced 2 new products, Endotech and Elation. I'll show those in just a little bit. That was also 2015. So they started selling sometime in Q1, and that means Q2 is going to be the first quarter where we're going to see full quarter of sales from these 2 new products. And lastly, in February, they acquired Creolife's Hero Graph production, which was bought for 2 times sales. That's better than the stock trading itself for about 2.5 times sales, which means it's going to be immediately accretive to forward earnings. So that was acquired on February 4th. So a bunch of things happen in Q1. And when I go to the simple thing that I like to do, when I go to the earnings estimates, which is right here, you see these earnings growth, and I go look at the earnings estimates that the analysts have. They're expecting 12.4% growth, but I don't see them ticking higher. I mean, the earnings estimates back in 6 months ago, we're looking at fiscal year 2016. Let me make this bigger so you can see. Right here, if I go to 6 months ago, they were $1.01 for fiscal year 2016 EPS. 6 months later, it's 98 cents. So it's actually come down 3 cents. It hasn't moved at all. Let's just call it. It's been a wash. It's been steady for the last 8 or 9 months. So forward earnings estimates have not moved, and all these things has started back in Q1. All right. So is there a disconnect in the story? That's what I always look for. Is there a disconnect? Maybe there is. Oops, sorry. And that's what I'm basically looking for. So your forward earnings estimates have not moved, which tells me that there's a disconnect in the story that could power the stock higher. You have bullish call activity taking place in May 20 strike calls, and you have a chart that is breaking out with a power candle on heavy volume through this resistance. Going back to my this chart right here, I expect a breakout from here. You target at first 22, and then after that 23.70. So how would I play it? Just follow the money. Just go straight to May 20 strike calls. Now the bid and ask spread has really widened over here, so that's going to be a little tough to get a fill. The stock is at 1980 right now. I suggest try to get a fill around 130 to 140. Okay, the bid ask is 110, 160. Do not overpay for these, because then you're just going to be spending too much of the underlying costs. Understand that even when you're spending about 130, 140, that as a percentage of where the stock is trading right now at 1980, that equates to what? About 7%, 8% of the underlying, so it's not cheap, even so. So I suggest buy it for about 130 to 140. Don't overpay and look for a breakout. Alternately, you probably will be better off going with July. I mean, there's 35 days to expiration versus 91 days to expiration in July. And here the implied volatility in July is 43%, which is closer to 38% historic volatility versus 58% in May. And so you'd be better off going with July. And here you may only have to pay 30 cents more. You might be able to get a FID for about $1.70 to $1.80 for July 20 calls, but it buys you 3 months instead of 1 month, and the delta is slightly higher too, 0.53 versus 0.51. So that means these July calls are going to push higher faster than than May, and you don't have to worry about theta decay. So preferably go with July 20 calls, pay about $1.70 to $1.80, and that's it. You're looking for a breakout. Target is 22 and right here, and after 22 comes all the way 23.70, which is right here, which is gap fill basically all the way back from October. That's it.